everyone obsesses over which meme coin will pump next, XDC Network quietly became the first blockchain company ever admitted to the Trade Finance Distribution Initiative alongside global banks. And now they're processing billions in real trade documents that literally move ships across oceans. Welcome to Crypto Journal. Hit that like button if you want more deep dives on real-world blockchain infrastructure that's actually changing how global commerce works. And join the channel membership, where I'll be tracking which trade documents are being tokenized and which ports are adopting XDC infrastructure next. The join button is right there next to subscribe. After you understand what XDC has built in the shadows of global trade, you'll realize this isn't crypto speculation. This is financial plumbing. We're in November 2025, and XDC Network just processed the world's first fractionally traded electronic bill of lading on blockchain. That might sound boring until you realize that bills of lading are the legal documents that prove ownership of cargo on container ships moving $9.7 trillion in goods annually across the world's oceans. Stick around, because at the 16-minute mark, I'm going to show you exactly how XDC is replacing paper-based trade infrastructure that's existed for centuries, and why the International Chamber of Commerce and World Trade Organization are writing reports about it. Let me start by explaining what digital trade infrastructure actually is, because once you understand the problem XDC is solving, you'll see why this could be bigger than payments. Every time goods cross international borders, there's a mountain of paperwork. Bills of lading that prove cargo ownership, letters of credit that guarantee payment, insurance certificates, commercial invoices, certificates of origin, customs declarations. These aren't digital PDFs you email around. These are physical paper documents with original signatures and official stamps. Why? Because international trade law requires it. The Hague-Visby rules from 1924 state that a bill of lading must be a physical document that can be endorsed and transferred. For a century, global trade has relied on paper documents being physically shipped via courier alongside the actual cargo. Sometimes the documents arrive before the goods. Sometimes they arrive after, and cargo sits in port warehouses accumulating storage fees while everyone waits for paperwork. The cost and inefficiency is staggering. The International Chamber of Commerce estimates that trade document processing costs represent 10 to 15% of the total value of international trade. That's roughly $1 trillion annually spent on pushing paper. Bills of lading alone cost approximately $420 per document in processing and courier fees. And it takes 5 to 10 days to process a letter of credit because banks are manually verifying paper documents. This is the infrastructure that moves global trade. And it's broken. Until 2023, there was no legal alternative. Countries were bound by century-old international conventions that required physical documents. Then everything changed. In September 2023, the UK passed the Electronic Trade Documents Act, known as ETDA. This law gave electronic trade documents the same legal status as paper documents in UK jurisdiction. Suddenly, digital bills of lading, letters of credit, and other trade documents became legally enforceable. But there was a technical problem. How do you create digital trade documents that can't be duplicated? If I email you a digital bill of lading PDF, I still have a copy. Who actually owns the cargo? You need a system where only one authoritative version exists and ownership can be transferred, like passing a physical piece of paper. This is exactly what blockchain solves. And XDC Network built the infrastructure to do it at scale. If you're still with me, comment electronic bill of lading. I want to see who's paying attention to the infrastructure revolution happening in global trade. Now let me introduce you to the platforms and frameworks that XDC has integrated to become the backbone of digital trade infrastructure. First, Trade Trust. Trade Trust is a digital utility developed by IMDA, the Infocom Media Development Authority of Singapore. Trade Trust is designed to facilitate the exchange of electronic trade documents in a secure and legally binding manner. It's built on the Model Law on Electronic Transferable Records, known as MLETR, which the United Nations Commission on International Trade Law, UNCITRAL, created to provide legal certainty for electronic versions of transferable documents like bills of lading. Trade Trust uses blockchain to notarize and verify the authenticity and ownership of electronic trade documents. When a bill of lading is created on Trade Trust, It's cryptographically signed and recorded on blockchain. The document can be verified by anyone anywhere in the world instantly. Ownership can be transferred digitally with full legal validity in jurisdictions that have adopted MLETRAL, which now includes Singapore, UK, and increasingly other countries. XDC Network is a core technology partner for Trade Trust. When trade documents are created on Trade Trust, they can be settled and tokenized on XDC Network. This means XDC provides the blockchain infrastructure that makes Trade Trust technically possible. Second, TradeFinix. TradeFinix is an institutional-grade ISO 20022 compliant protocol built specifically on XDC Network for trade finance. TradeFinix is like Amazon, but for trade documents. Small and medium enterprises, SMEs, can post their trade documents, invoices, bills of lading, letters of credit on the TradeFinix marketplace. They're looking for financing. Lenders, which can be private credit investors, institutional funds, or even retail crypto investors, review the trade documents, assess creditworthiness, and provide financing. The revolutionary part is that all trade documents on TradeFinix are tokenized on XDC Network. An invoice becomes a tradable digital asset. A bill of lading becomes a fractionalized token. This means trade finance assets that were historically illiquid and locked in bank balance sheets can now be traded on secondary markets with instant settlement. TradeFinix has already processed billions in trade finance volume. They're not in pilot mode. This is production infrastructure processing real commercial transactions. Third, XDC Trade Network. This is the comprehensive suite of decentralized applications built on XDC that integrates everything. Trade Trust for document authentication, TradeFinix for financing, KYC and AML compliance providers, regulated custodians for fund transfers, tokenization platforms, all working together as interoperable infrastructure. XDC Trade Network is MLETR compliant, meaning documents created here have legal validity in jurisdictions that recognize electronic trade documents. This isn't a crypto project trying to find product market fit. This is infrastructure that the World Trade Organization and International Chamber of Commerce have written about in official reports as the future of global trade digitization. The WTO published a book in 2020 titled Blockchain and DLT in Trade. Where do we stand? TradeFinix and XDC are featured prominently as leading solutions. The ICC UK released a report highlighting XDC Network's role in enabling digital trade transactions. These aren't crypto publications. These are the governing bodies of international commerce endorsing XDC as critical infrastructure. Now let me show you the historic transaction that proves this infrastructure works in the real world. In 2024, TradeFlow Capital, a prominent SME trade finance provider, executed the world's first digital transaction using an electronic bill of lading to raise liquidity. Here's how it worked. A shipment of goods was loaded onto a container ship. Voyage duration was 7 days. Normally, the exporter would have to wait 7 days plus additional time for paperwork processing to receive payment. But with XDC's infrastructure, the bill of lading was digitized on Trade Trust and tokenized on XDC Network via TradeFinix. Within hours, private credit investors reviewed the tokenized bill of lading on the TradeFinix marketplace, assessed the creditworthiness, and provided financing. The exporter received payment immediately. The investors now held tokenized ownership of the goods in transit, which would be redeemed upon delivery. Settlement happened instantly on XDC Network using FXD, which is Fathom Dollar, an XDC-based stablecoin. Zero settlement risk, zero counterparty risk, instant liquidity. This transaction was groundbreaking for multiple reasons. First, it was the first time a trade document was represented as an electronic tradable document that was fractionally traded. Multiple investors could own portions of a single bill of lading, democratizing access to trade finance. Second, settlement was instant. Traditional trade finance settlement takes days or weeks through correspondent banking. XDC settled it in seconds. Third, it was legally compliant. The electronic bill of lading had full legal standing under MLETRAL framework and UKSEDDA. This wasn't a proof of concept. This was a real commercial transaction moving real goods and real money. And it worked flawlessly. The International Chamber of Commerce featured this transaction in their reporting as evidence that blockchain-based trade finance is ready for global adoption. Comment instant trade settlement if you're realizing blockchain is replacing centuries of paper-based trade infrastructure. Let me explain why this matters for the $5 trillion trade finance gap. According to the Asian Development Bank, there's a $5 trillion gap between the demand for trade finance and the supply available from banks. Small and medium enterprises around the world can't access the financing they need to engage in international trade. Why? Because banks consider SME trade finance too risky, too expensive to process, and too illiquid. A small exporter in Vietnam ships electronics to a buyer in Germany. The exporter needs financing to produce the goods before getting paid. They approach banks for trade finance. Banks assess the risk, require extensive documentation, charge high interest rates due to perceived risk, and take weeks to process the application. Many SMEs get rejected outright because banks don't have efficient systems to assess creditworthiness for small transactions. Even when trade finance is approved, it's locked in the bank's balance sheet until maturity. Banks can't easily sell or transfer these assets, so they're stuck holding risk. This makes banks conservative about how much trade finance they provide. The result is a massive financing gap. Trillions of dollars in legitimate international trade can't happen because SMEs can't get financing. XDC and TradeFinix solve this by creating a liquid marketplace for trade finance assets. An SME in Vietnam digitizes their purchase order, invoice, and bill of lading on TradeFinix. These documents are tokenized on XDC Network. Now, instead of one bank deciding whether to provide financing, thousands of potential lenders globally can review the opportunity. Private credit investors, institutional funds, even crypto investors looking for yield on real-world assets. Competition among lenders drives down interest rates. Digitization reduces processing costs from $420 per document to near zero. Tokenization creates liquidity because investors can sell their position on secondary markets if they need to exit early. This democratizes access to trade finance. SMEs that were previously excluded from the financial system can now access global capital markets. XDC co-founder Atul Kakade said it directly. Tokenization of millions of trade documents will enable a large part of over $30 trillion in trade finance to go completely digital. $30 trillion. That's the total trade finance market. And XDC is building the infrastructure to digitize it. But it's not just about SMEs. Large corporations benefit too. Multinational companies moving goods across borders face the same inefficiencies. They pay millions annually in trade document processing. XDC's infrastructure reduces those costs to near zero. Even if a massive corporation saves $1 million per year on trade document processing, that's a reason to adopt. Multiply that across thousands of corporations, and you see why institutional interest is accelerating. Now let me show you the global partnerships and government endorsements that validate XDC as legitimate infrastructure. XDC Network is the first blockchain company ever admitted to the Trade Finance Distribution Initiative, TFDI. This is a consortium of the world's largest banks and trade finance institutions. Being admitted means XDC is recognized as legitimate infrastructure by the banking industry, not a speculative crypto project. XDC is also a member of the International Trade and Forfeiting Association, ITFA. This is the leading industry association for global trade finance. Membership requires demonstrating operational capability and compliance with trade finance standards. XDC isn't just a member. They're actively participating in working groups that define the future of digital trade finance. In Singapore, XDC partnered with IMDA to launch XDC Trade Network for financing MLETRL-compliant digital trade. This is a government-backed initiative. Singapore is positioning itself as the global hub for digital trade infrastructure, and they chose XDC as a core technology partner. In the United Arab Emirates, Abu Dhabi Global Market, ADGM, tested TradeFinix for tokenized trade finance. ADGM is a financial free zone that serves as a gateway for financial services in the Middle East. Their testing of XDC-based infrastructure signals institutional and government interest in the region. In the United Kingdom, XDC Foundation submitted written evidence to Parliament regarding MLETREL implementation. When governments are writing laws about electronic trade documents, they consult industry experts. XDC is at the table advising on policy. In Brazil, Mercado Bitcoin, the country's largest crypto exchange, partnered with TradeFinix to launch Brazil's first RWA fixed income token, a tokenized trade finance product on XDC Network. This brought institutional-grade trade finance to Brazilian investors for the first time. In Australia, XDC Network was a finalist in the Technology and Infrastructure Leader category at the Australian Blockchain Industry Awards. XDC also has representation on the Digital Economy Council of Australia, advising on blockchain policy. These aren't crypto conferences and marketing partnerships. These are governments, central banks, and trade finance institutions recognizing XDC as critical infrastructure for the future of global trade. Let me explain the technical architecture that makes XDC uniquely suited for trade finance infrastructure. XDC Network is a hybrid blockchain, combining the transparency of public blockchains with the privacy and compliance features of private blockchains. For trade finance, this is critical. Corporations need privacy for competitive reasons. A company doesn't want competitors seeing their supplier relationships or pricing. But regulators and auditors need transparency to ensure compliance. XDC's hybrid architecture allows trade participants to keep sensitive data private, while regulators can access necessary information with proper authorization. This satisfies both corporate privacy needs and regulatory transparency requirements. XDC uses delegated proof of stake consensus with masternode architecture. There are currently 300+ masternode candidates, with 108 actively operating. Each masternode operator must stake 10 million XDC. This creates a highly decentralized and secure network. Masternodes are run by enterprises, institutions, and community members globally. Deutsche Telekom, one of Europe's largest telecommunications companies, operates a masternode on XDC. This is institutional validation of the network's security and reliability. XDC processes 2,000 transactions per second with 2-second finality. This is fast enough for real-time trade finance settlements. Transaction costs are near zero, critical when processing millions of small trade documents. XDC is EVM compatible, meaning any Ethereum smart contract can run on XDC. This makes it easy for developers to build trade finance applications. And critically, XDC is ISO 20022 compliant. ISO 20022 is the global standard for financial messaging. SWIFT recently migrated entirely to ISO 20022. Banks, payment systems, and financial institutions worldwide use this standard. XDC's compliance means it can integrate seamlessly with existing banking infrastructure. Banks don't need to rip out legacy systems. They can plug XDC infrastructure into existing workflows. This is why enterprises are adopting XDC. It's not forcing them to abandon everything and go fully decentralized. It's providing blockchain efficiency while maintaining compatibility with traditional finance. If you're still watching, comment ISO 20022 compliant. I want to know who understands why this technical standard is the bridge between blockchain and traditional finance. Now let me address why this hasn't been front-page news in crypto media. The answer is simple. Trade finance infrastructure is boring. It's not sexy. It doesn't pump in price within a week. It's not a dog coin with a cute logo. It's financial plumbing. The pipes that move $9.7 trillion in goods across oceans every year. Crypto media focuses on whatever generates clicks. Meme coins pumping 1,000%. NFT projects with celebrity endorsements. DeFi yield farming with unsustainable APRs. These topics generate engagement and advertising revenue. Articles about tokenized bills of lading and MLETREL compliance don't generate clicks. But here's what matters for long-term value. Infrastructure doesn't need hype. It needs adoption. XDC is getting adoption from the entities that actually move trillions of dollars. The International Chamber of Commerce, the World Trade Organization, Trade Finance Distribution Initiative, Singapore's government, UK Parliament, major banks through Contour. These institutions don't care about Twitter followers or TikTok influencers. They care about infrastructure that reduces costs, increases efficiency, and meets regulatory requirements. XDC has built exactly that. And while retail investors chase narratives, institutions are quietly integrating XDC into the backbone of global trade. By the time crypto media starts covering it, adoption will already be widespread, and price will have already moved. This is the pattern we've seen repeatedly. Chainlink built Oracle infrastructure for years while everyone focused on DeFi coins. Then enterprises started using Chainlink oracles, and LINK went from under $1 to over $50. Theta built video streaming infrastructure while everyone focused on gaming tokens. Then mainstream adoption happened and TGTA appreciated massively. XDC is following the same pattern, building real infrastructure, achieving real adoption, media silence, then sudden mainstream awareness when it's too late to buy early. Let me show you what's coming next that could catalyze wider recognition. First, the TFD 2026 initiative. The Trade Finance Distribution Initiative is targeting 2026 as the year when digital trade finance reaches critical mass. Multiple banks planning to go live with MLETRAL compliant platforms. XDC infrastructure is the backbone for many of these initiatives. Expect announcements throughout 2026. Second, expansion of electronic trade document laws globally. The UK's Electronic Trade Documents Act was first. Other countries are following. The European Union is considering similar legislation. Asian countries are exploring frameworks. As more jurisdictions recognize electronic trade documents, the addressable market for XDC infrastructure expands dramatically. Third, SBI Holdings expansion in Asia Pacific. SBI, one of Japan's largest financial conglomerates, partnered with XDC to create SBI XDC Network (APAC). They're deploying XDC infrastructure across Asian trade corridors: Japan, Singapore, India, Australia. SBI's involvement brings institutional credibility and access to major corporations in the region. Fourth, integration with R3 Corda. XDC and SBI completed a proof of concept demonstrating interoperability between XDC Network and R3 Corda, one of the leading enterprise blockchain platforms used by banks. This integration means assets can move seamlessly between XDC's public infrastructure and Corda's permission banking environments. This bridges public and private blockchain worlds. And fifth, tokenized US Treasury products on XDC. TradeTech launched tokenized US Treasury instruments on XDC Network. YieldTech's USDY token tracks a BlackRock-managed US Treasury ETF and is hosted on XDC. As tokenized treasuries become standard collateral for trade finance, XDC captures that settlement volume. These catalysts aren't speculative. They're actively developing. The infrastructure is being built in real time, and mainstream awareness lags adoption by 12 to 24 months. This is Crypto Journal, and I want to leave you with this. While everyone is obsessing over which narrative coin will pump next week, XDC Network is literally becoming the infrastructure layer for global trade. Not in some distant future. Right now, today, bills of lading for container ships are being tokenized on XDC. Letters of credit for international commerce are settling on XDC. Trade finance for small businesses is being democratized through XDC. The International Chamber of Commerce writes reports about it. The World Trade Organization publishes books featuring it. Governments consult XDC when writing laws about electronic trade documents. This isn't crypto hype. This is infrastructure for a $9.7 trillion industry being rebuilt on blockchain. Most retail investors won't discover this until the adoption is complete and price has already moved. But you're watching this video. You have advanced knowledge. The question is whether you recognize infrastructure opportunities or whether you'll chase the next meme coin pump and miss the real revolution. If you found value in this infrastructure deep dive, smash that like button. This is the type of analysis that reveals what's actually changing the world while everyone else is distracted by noise. Join the channel membership for exclusive tracking of which trade documents are being digitized, which ports are adopting XDC infrastructure, and which enterprises are integrating next. The join button is right there next to subscribe. After understanding XDC's role in digital trade infrastructure, you know why following these developments gives you years of advanced positioning. Drop a comment telling me, did you know XDC was the backbone of digital trade infrastructure? Or were you, like most people, completely unaware this was happening? Have you ever worked in trade finance or logistics and seeing how broken the paper-based system is. I read every comment, and insider perspectives shape future content. Subscribe if you haven't already, because as digital trade infrastructure adoption accelerates through 2026 and 2027, I'll be covering every milestone that mainstream crypto media ignores until it's too late. The infrastructure revolution in global trade is happening in silence. XDC is building it. And now you know. See you in the next one.